it's double the market. And he said, Fadi, this is too low for me. I can't do 24%. He went away, came back after 6 months. He lost $500,000 in a scam. So number one is that it's profitable now. Number two, has been profitable for the last 5 years.
Okay.
Third, it will, like, there's a earnings forecast, growth forecast. So I need to see that the profit is increasing for the next 5 years, whereby somebody's telling you this is good, this is bad. And the compound effect of feedback for 12 weeks yields tremendous results.
Alrighty, everybody, welcome back to the Home Guys podcast. Today we have Fadi Habib, and he is the founder of Legacy Wealth Builder Academy. Like many people, Fadi spent years working hard, saving money, following the traditional investing route, but still didn't feel financially secure. That all changed when he discovered options investing, a strategic approach that can generate income, manage risk, and build wealth without spending hours watching the market. Now, through his 6-step growth system, Fadi teaches busy professionals and entrepreneurs how to understand the stock market, avoid common mistakes, and create financial freedom on their own terms. So welcome, Fadi. We're excited to have you here and kind of learn what this is all about.
Hi, Jen and James. How are you?
Good.
Doing well. So how did you kind of go down this path? How did you develop this?
When I was a kid, I did all what my parents told me to do. I was a good student. I got good grades. I went to a good university, got a scholarship, because they told me if you have a good 9 to 5, this is the road to wealth.
Right.
And then I don't know, guys, I felt duped. So all of my, I got duped, you guys. So, when I, like all of my career, I worked in Schlumberger oil field manufacturing, company called Celestica, which is the IBM factories. I worked for BlackBerry, cell phone. All of my jobs were high-paying jobs, okay? But I'm not wealthy, so I figured out that there's something not right. Like, I'm not having the right information here. So 30 years ago, I read this book called Cash Flow Quadrant. I think it's a must-read for everybody.
Yep.
And it opened my eyes. There are 4 ways of making money, and I'm stuck in one that does not give me money. So basically, very quickly, the 4th quadrant is where I wanted to be, which is being an investor. The problem is none of my parents or my family were investors. They're just career guys. So I had to take on learning. So I started with real estate investing, made a lot of mistakes, got a lot of people to teach me. Some of them were good, some of them were scammers. But I did very well. Real estate had been tremendously good for me. And then 15 years ago, I'm very risk averse. So for me, 15 years ago, I thought that anybody who is investing in the stock market is an irresponsible guy or girl, and that it's basically gambling. And the reason I had that view is that everybody around me was losing money. And because I have no interest in losing money, then, okay, if everybody is losing money, it doesn't look like an investment for me. It's just speculation or a casino. And then one of my really good real estate friends told me, listen, there's this course about stocks and options. Come. I said, I don't want to waste my time. I said, just come. So I went there with the objective of proving to myself that I'm right and that the guy who's speaking doesn't know what they're talking about. So, it's a normal confirmation bias, but I was still a little bit open-minded. And I was pleasantly surprised that in the world of stock investing, I learned that it's like driving. There are people who drive a car, sedan. There are people who drive a racing car. There are people who drive a motorcycle, which I had a motorcycle once. It's pretty dangerous. It's dangerous to the point that they don't allow you, like they don't even require you to put a seatbelt. Like, you're a hopeless case. You don't need,
That's a sign right there. Yeah.
And there are people who drive a motorcycle on a rope in the circus. All of these are different risk profiles, right? Like they're all driving, and even the sedan. Somebody can drive a sedan, which is quite a safe car, at 50 miles per hour, and somebody can drive it at 250 miles per hour. So there's so many risk profiles, and I learned that the people who are losing money are the people who are going into, like, there's this illusion of getting rich quick and getting so much chasing ROI to the point that they're taking a lot of risk. also people do not understand the animal that is called the stock market. So if you have a pet, if you have a dog, it's different than if you have a python. And the reason I'm giving this example is that one of the people who came from Florida to rent my house in Toronto, he had a python as a pet. So I had to call the city and figure out. So what I'm saying here is that you need to understand that the dog eats 3 times a day or 2 times a day. The python eats once a month. You need to understand the animal that you're dealing with. It's a different way of dealing with things. The dog will maybe bite you, and that's the risk from having a dog. The python will not bite you, but will constrict you. You need to understand that there is a different mode of risk dealing with the python.
Absolutely.
So I learned that there's so many people do not understand this. Like the misconception about the stock market is humongous. That it is not. Most people do not use rational thinking dealing with the market, especially in the short term. It's all about fear and greed. People run after the get-rich-quick schemes, and there's a lot of scammers out there. So the combination of all this, like people are losing. However, what I discovered is that there is a responsible way. There's a way whereby you understand it, that it's not really gambling. It is you're selling and buying businesses. It's not really that much different than buying a rental property, right? If you're asking the right questions. No real estate investor will buy a property and ask tomorrow, the second day after they bought it, did it increase? Can I sell it now? Like that would be stupid. But with stocks, a lot of people do that. They think that they get rich quick. Also, people do not understand that with anything there's risk. And if you chase so high ROI, I talk to a lot of people who lose a lot of money in the stock market because they have unrealistic expectations. Risk and ROI are a couple. You cannot separate them. If you think you can double your money every year, you need to understand that you're approaching a lottery ticket, which means you're getting huge risk. Because somebody told me that the chances of you winning the lottery doesn't change whether you buy a ticket or not. That's how small it is. That's how much. So I gotta stop. I gotta stop talking. But bottom line is there is a way. There is a responsible way to approach investing in the stock market. There's so much money to be made if you're a little bit patient and responsible and rational.
So you live by the philosophy of it's a marathon, not a sprint, right? I mean, it's basically what you're, you gotta play the long haul versus trying to get that. I think it's just like anything. Everybody's trying to win that lottery ticket.
And if all what you do is thinking, if all of your eggs is thinking that you can win a lottery ticket, what do you think the chances of you ending up winning? It's very small because it's gambling. It's not investing. I'm interested in investing. I have no interest in losing money or putting my money at risk. And I try to teach people that the first objective in investing is to protect your capital. Okay, it's not getting the highest ROI. When they asked Warren Buffett, like, give us a word of wisdom, he did not tell people go get the highest ROI. This guy made 6 million percent ROI in his career, but his teaching is not to go find out the highest ROI and do it quickly. No, protect your capital. And what is the second rule? Do not forget rule number 1. Right. Do not lose. He did not say go chase the highest ROI. And I guess it depends on who you're hearing from. If you're hearing from responsible people like Warren Buffett, I know he's too patient for me, so I can't buy something and wait 30 years for it. But also, if you hear about, like, from the people who are into day trading and you're gonna get $100,000 in 2 weeks, and there's the crypto. What are you? I talk to a lot of people who get scammed and who lose a lot of money because I was just talking to a lady 2 months ago, and she was totally convinced that she needs 106% ROI every year. How did she get the 106? Not sure, but of course she came to me with a huge loss, and I couldn't really help her that much because she's not a student. Like she's not a student of mine. But there is a way to do it in a responsible way. You need to approach it same as the.
That's not what the kids today are wanting, right? They see the instant gratification because they think it's instant gratification. So I'm struggling right now. I think we're kind of telling you what we do is we flip houses, right? So we are we buy ugly houses. We just think we got a better model. And so we're now franchising that model. around. We already have 3 franchisees. That's one of the reasons why we're doing this podcast. We're getting more people out there and understand, hey, what we do. But my problem is right now is they want to see the advertising of me standing behind a Lamborghini.
Exactly.
And like fast stuff. And I'm like, first of all, that's not me. Right. I'm just,
he's not a Lamborghini type looking guy. Yeah.
I want to live comfortable. My background, I was a firefighter. I fell into this 10 years ago. And so what you're saying, it really reflects now, because now we're trying to advertise for this, for the franchise side, and people want to see all the little bells and whistles behind me. And I'm like, that's not who we are. And we also want to be a guru. We want to be a guru, but we don't want to be that guru who says, oh, I flip houses. So where do you flip them? Oh, I sold that business. So how are you trying to sell other businesses when you sold yours? You're flipping. So we want to do it at the exact same time. And that's what we're doing. We're proving, the systems, but that's the number one thing I struggle about is everybody thinks that wholesaling is, oh, it's the bomb. You can make $40,000 at a pop. Yeah, you can, but do you realize it cost us $15,000 to maybe even get that lead? And then making sure you're working it. I think it really comes down to it's an age thing, and they haven't hit a hard time. They don't know what hard times are. And we've seen the hard times come and go.
Yeah, and no one is interested in getting rich slow. Like they asked Warren Buffett, what you're doing is not really that difficult. Why are not a lot of people like following your steps and getting rich that way? They said people are not interested in getting rich slow. Of course, he's tremendously rich, but he was a billionaire. The first billion he did when he was 56, and the first stock he bought is at 11. So again, there is so much money to be made if you're responsible and if you're not greedy to the point whereby you're thinking of unrealistic expectations. Because everything in life, there are laws in life that there is risk and there is ROI, and you need to add value or buy businesses that add value. That's what I do in stocks. I buy businesses that are really good. I don't like to speculate. I don't want to find a bad business that I think it might be good in the future. I'm very risk averse, and again, you're not gambling. You cannot approach it with gambling. Like I had this guy who came to me. Again, I have this 12-week mentorship program that I interview a lot of people. So he came to me and said, I told him my target is 24% ROI per year, and I think this is really pretty good because it's double the market. And he said, Fadi, this is too low for me. I can't do 24%. He went away, came back after 6 months. He lost $500,000 in a scam.
Hey, sorry to get you out of that video. Just got a quick message for you. Are you looking to quickly fund your next real estate investment with low rates and less requirements? If that sounds like you should look into Kiavi. Kiavi is a hard money lender trusted by professional real estate investors across the whole country. Take advantage of today's competitive terms and quick close loans to fund your next property. If that sounds like something you need, check out the link in the description down below to check out Kiavi. And now let's get you back to the show.
And he's a nice guy, and he's not a stupid guy. And the scam, by the way, just again for everybody who's listening, there's so many scams out there. It's called the pump and dump scam. I know personally 5 people who lost money in the same way. I don't want to take a lot of time, but basically they tell you that they're going to tell you what to buy, what to sell, and they're really giving you bad advice for a certain purpose. And the guy lost $500,000. And all the people, the 5, are actually smart people. You guys, like they're not naive. If you're listening, they're good, smart people, but they don't have a grip on their greed or their expectation. The illusion of quick money blinds them.
Yeah. Well, and that kind of leads me in here. So for people that only hear scary things about options trading, how would you explain it? How is it also different from like just the normal day trading approach that people hear about and that's out there?
So high level in investing, there is Warren Buffett's way, which is you buy something and you wait 30 years. This is kind of the most responsible way, but I don't have 30 years to wait. Okay, so that's there's
people don't want to wait.
There's swing trading, which is going in and out for about a week to 6 weeks, and there is day trading in and out in a day, and there is an extreme way called scalping, going in and out in a few seconds. For me, day trading and scalping is a very sure way for the masses to lose money very quickly. It's an illusion.
But you meet these guys that know everything about it. What are you talking about, James? I'll make you money. I swear. This is the greatest thing ever.
I have a test, Eugene. Can you name one billionaire who's a day trader? Just one.
Exactly. And that's why I'm in real estate.
If it is that easy, you guys, we should have seen 10 billionaires or 50 billionaires by now. If it is that quick, like, you know,
If it works, yeah. If it works, then
name me
there.
one billionaire who's a day trader. Just one.
Right.
There's none, because it is not consistent. I think part of the issue, you guys, is that the market sometimes will give you some profit. So you do something that is stupid and very risky, and then you will get some money. And you will think, I'm smart. I figured it out. I'm going to do it again and again. And you make money second time. You said, you know what? I got it, you guys. You know what? I'm going to be billionaire in 2 months. And then risk is very jealous. When there's ROI, there's risk. Risk is not coming after your profits. Risk is coming after your capital. So if you are blind and you did not study the thing that you're doing, and you're just hopeful that it's going to make money quickly, what ends up happening, because I talk to these people every day, what ends up happening is that you're going to make money 1, 2, 3 months, or 1, 2, 3 days, or 1, 2, 3 years, and then the third and fourth month, you will give back all the profit plus your capital. And the examples are numerous. So you need a responsible way. You need a way that makes sense. It's not a lottery. You are buying businesses in the stock market, meaning, and the only objective of a business is what? Is making profit. So it's not making nice, sexy products. Yeah. It's making profit. So if a company has really good products but not profitable, I will buy the product, but I will not invest in them, because if you have two rental properties in your street, one of them is making money, one of them is not making money. Just logically, which one are you going to put your money in to invest? If you want to get your money back, you got to put the profitable one, same as coffee shops or something. So I focus on really good companies. For me, good is not about the product. Of course, you need good product to sell and be profitable. But the objective is, for me, the test is very simple. If the company is making money, then maybe I'll look at it. And for me, 1% of the 6,000 companies in the stock market are investable. You would be surprised that half of the companies in the stock market are not even making money.
So you're judging on something. What are you? There's something else that you're judging the company off of, or are you just judging it?
So number one is that it's profitable now. Number two, has been profitable for the last 5 years.
Okay.
Third, it will, there's a earnings forecast, growth forecast. So I need to see that the profit is increasing for the next 5 years. I needed to have a solid balance sheet, shareholder equity. There's something called also free cash flow. I need the company to have cash, because if a company has cash, it's like two families, like James family and my family. We're both equally rich. Let's say we have both net worth of $2 million. I have a property. The $2 million is stuck in a property, and you have $2 million in cash. Which one of us can afford going to Florida for a month for vacation? Right. Which one of us, if there's a medical bill, so companies are the same. The companies who have free cash flow, for example, Apple, they have something like, I don't know, 70 or 80 billion.
Some ridiculous number.
Yeah. So they can invest in R&D, which is very important, because they need to work on projects that they will sell us next year to keep on the profit. They can invest. They can buy back other companies, smaller companies with better technology. They can buy back stocks. Like Apple, for example, have this really solid balance sheet, and they just not lost, but spent $10 billion on a project that didn't work. But their balance sheet is so strong that we don't even see that there's an issue. They just tried to make an electric car, and it didn't work. But because they have so much money, they can afford to do something like this and fail, right? BlackBerry, for example, and I love them because I worked at BlackBerry for 6 years.
Yeah.
They don't have any profit. They've been losing money for the last 3 years. They're getting better, but they can't spend all that money on R&D. They don't have money. They're losing money. So for me, we need to evaluate stocks as if they are businesses, because they are not lottery tickets. So most of the people I know in the market, if they buy a refrigerator, they would spend 3 hours researching it. If they buy a car, they would take 2 months to really look at what is a good car. But when it comes to stocks, they forgot all of that. They just buy stock because they think it's going up, so it's going to go up forever. So they buy it usually at the top, wait for it to go down, because again, one of the behaviors of the stock market is that it's not like real estate. Real estate, the cycle is very long. Stock market is very volatile all the time. So it goes up and down. That's the normal behavior. Same as the Python. That's the normal behavior of the stock market. I don't get annoyed or anxious when it corrects every now and then, because I know this is the normal behavior. It's like breathing. I need oxygen, I inhale, but it doesn't matter how much inhaling I'm going to do, I will have to exhale at some point. So when the market corrects, guys, it's normal, it's okay, as long as you have a good stock. Also, one of the things that good lesson that I learned from Peter Lynch is, in the short term, there's absolutely no correlation between the price and the value of a stock. Meaning, you can have good stock and the price is going down, down, down. You can have a bad stock and price going up, up, up. And that disparity is golden, because it's an opportunity to make a lot of money. Real estate investors know that. They, same as you guys, you drive value to there are opportunities out there whereby you can have a building that is worth $300,000, but there's a motivated seller that sells it at 200 because he or she is relocating or have a medical bill, whatever, going through divorce. So these opportunities out there, and real estate investors go scour the market to find these. The stock market does that all the time, because the price is different than the value. And the problem here is that the value is not very easy to get, because the price chart that you see is just the price. There's no value there, and you need to go find the value by finding something called intrinsic value. So if you see that stock, Meta, for example, in 2022, went from $400 to $80. It's still a very good company, but the stock market in the short term is very irrational. It's driven by fear and greed, speculation, manipulation. So the way I explain it to my students is like, in the short term, and short term in the stock market is about 2 years, it's like a drunken teenage party. There's absolutely no rational. So if people are afraid of the Y2K, I know you guys are old enough to remember the Y2K. Yeah. If people are afraid of the Y2K, Meta will go down. Why? Meta's still making money. Why would it go down? But if there's a war in Ukraine, Apple will go down. If there is COVID, so people, because the price chart, I call it, it's the hormone chart of the market, like of the people. Like it has nothing to do with the business. It has to do with if you're afraid or not. It's completely irrational. So very important to know that in the short term, the price and value are completely disconnected. And if you understand that, you will start seeing opportunities. So when Meta goes from 400 to 80, and you know that the intrinsic value is 300, so the value is 300, but it's at a discount. What would you do if you say that discount? You will buy. And that's why the statement of you need to buy when there's blood in the market. Blood in the market means everybody's selling. That's why the price is going up. People are afraid of whatever, a war, terrorist attack, whatever. They're selling irrationally. Now you need to, if you know, but not everybody, if you know that the intrinsic value is 300 and it's giving you the opportunity to buy it at 80, everybody I know that knows anything about it, they were scouring, trying to find money to buy it at 80. Of course, in a year or two, Meta went to 760, 10x. But the idea here is that there are principles that you need to understand the market, understand how it behaves, and it's very logical. Any investing should be logical. It should not be based on lottery tickets, right?
Right. You're not going to Vegas. You're doing
you're not going to Vegas, but most people are using the stock market as Vegas, right? So anyway, a little bit of education. So I see a lot of opportunity for people to make money if they do it right in a rational way. In one of my tests is that I need to be sleeping well at night. If I am anxious about my investing, it just means that I'm gambling. I'm not really.
So talk to us a little bit about, you keep saying that you have a program that people can sign up. This is where you can shine. You can tell us, give us a couple minutes of like what they get. And then we'll make sure to post all that stuff out so you can, maybe you can get some other students, or because first of all, before you go down that road, I really do appreciate you using use examples. And that to me is when you're teaching, I can relate to something where, I can't relate all the time with stock market because I don't know it very much, but I can relate to other things and then, put it back towards the stock market. That's probably something that Jen and I probably don't have a whole lot into, in all honesty. We know real estate, we know how it changes, we know how We also know how to put it in layman's terms too for the general public. So that's the one thing that I really do appreciate is, and why I'm still very, very interested is because you keep throwing it in more in layman's terms. So tell us a little bit about your program.
Yeah.
Okay.
So the 6-step growth system, and then tell us about that. And then what inspired that? How did you even come up with that concept?
Okay. So first thing, my program is mainly for busy professionals. So people who actually have 9 to 5 or very busy are mainly risk averse. So it's not for people who who want to get rich quick scheme type of things. It's very responsible. It's a 12-week mentorship program where you don't need any prior experience. We'll go one step by step, and it's not a bunch of videos. It's a very hands-on. I do believe that you cannot learn how to swim or ride a horse or real estate investing or stock investing by watching a bunch of videos. You need someone with you jumping into the pool, because we can talk about how to do backstroke all day long. Unless somebody is with you in the pool to teach you and tell you, no, put your hand like this, you'll not really get it. So it's a 12-week mentorship program, and it's mainly around the growth system. So the growth system is number one. The main elements is strategy. But for me, strategy in an equation, I'm an engineer, so I like to talk in equations, is only 10%. So if you go to YouTube and watch something and you think you got it, that's only 10% of the equation. That does not lead to consistent results.
Sure.
30% of the equation is risk mitigation. Understand how other people lost money in this thing that you're doing, and you learn. Like when you cross the street, you need to understand how to risk mitigate the risk of getting hit by the car. So we do a lot of stuff like stopping the red light, crossing from the pedestrian. We do a lot of stuff so that the risk goes really, really down. So 30% is that. 60% is dealing with the psychology. We all have fear and greed. If you're 100% fear, and this goes with any investment, not just stocks, you will do nothing because you will be completely paralyzed. And as an engineer, I was a lot of times there. I have solace in analyzing a real estate deal for about a year or two. It protects you from taking any action. And if you're 100% greed, you will do something stupid like selling your house and go buy lottery tickets. We all need a healthy dose of fear and greed and managing these. Okay. If you have all of that, that's not enough. If your goal is doubling your money every year, it's the same as I'm in Toronto. If I need to drive to Florida, it takes 24 hours. If I insist that I need to drive and reach there in 3 hours, what will I have to do? I will have to drive at insane speeds, correct? If I'm true to my objective. Even if I'm not involved in an accident the first hour, and I'm driving at 900 kilometers per hour because I have an objective, I need to reach there in 3 hours, it's just a matter of time. I'm either going to kill somebody or be involved in an accident or get put in jail, okay? Because it's not sustainable. So same thing as with investment. You might know how to drive, but if your objective is wrong, and for me, calibrating my tribe at 24%, it's a very good ROI, as well as the most important thing, not putting our money at a lot of risk. So that's the goal part. The last thing is, again, it's part of the program, is that you cannot put your money to learn this. You need to do this in something called a paper trading account, meaning if you're learning something, you can't just test it. Like if you're driving a car, if you're learning how to drive a car, you can't just take it the first day and go to the highway and tell me that you're learning how to drive. That's a suicide. So a paper trading account is an account whereby you open for free, and it has all the different bells and whistles. It's a real account. It's just that you're not using your money. They give you $1 million like fake monopoly money to train. I tell people the responsible thing to do is that you need to, like, you should not be trusting anybody talking about money. That's number one. So don't trust that you're going to make money with my method. Try it. And if you're losing money in the paper trading account, you have no business going to live trading. Don't fund your account.
Yeah.
If you're training wheels,
You're not ready.
If you're losing money, it means that whoever told you the strategy doesn't know what they're saying. So if somebody's telling you day trading, please try it first before you go put your money and lose it, right? So try the system. If you're losing money, then whoever's teaching you doesn't know what they're saying, or you're making mistakes, or you do not understand. Regardless, the issue is you got to fix it in the paper trading account. Once you know that you're making money consistently and you stop making mistakes, because it's new, you got to make mistakes, then you can graduate and put a little bit of money. So these are the main elements of the program. It's hands-on. It's not theory. It's there's zero risk in the training because it's paper trading. Yeah. What I think you asked me something else, Jen, but I forgot what it is.
Oh no, just kind of how did you develop this concept?
I developed this concept because, again, 15 years ago, when I started going into this and I opened my eyes that there is a responsible way, I took a lot of courses. I did very well. So the people that I'm with told me, why don't you coach for us? And I understood that most people who take courses, you know how many percent implement? 3%.
Oh.
So there's a,
You say that finished
the people who take courses, the percent of people who implement what they learned in the course is 3%.
Oh,
That's it.
I really do. It's kind of like
So-
you go to a big conference where they're for $9.99 and you're learning about flipping houses, but nobody's
Correct. Because you need the hand holding. Again, it's the same as swimming. It doesn't matter how many videos you watch about swimming. It doesn't matter how many lectures or hours of explaining to you how what is the taste of biting an apple. You gotta do it. You gotta do it. You gotta learn. So what I developed, I said, I need to get the best portions, but the main thing is that it cannot be a video course because I know that it's not effective. So what I do is I flip the whole thing, learning by doing. So even the first day and I developed a way that is completely safe in the paper trading account. So nobody is afraid to make mistakes because there's no consequence money-wise to the mistakes.
Right.
So even from day one, session one, they start writing and selling puts with me. And they learn by doing. So there's less explanation in the beginning. Like I know there's a lot of questions. So I entertain them for an hour. And then after an hour saying, no more questions. You got to do what I tell you to do. And week after week after week, when I look at their trades and give them feedback, this is kind of the golden value, whereby somebody's telling you this is good, this is bad. And the compound effect of feedback for 12 weeks yields tremendous results. By the end of week 8, they already have seen that they can make money, and they're telling me, Fadi, you're wasting my time with this paper trading thing. Now I want to but now it's more responsible because they are at a place whereby they know what they're doing. They already proven to themselves. They didn't trust somebody else. They know they can do it themselves. And it's especially real estate investors. It's a really beautiful way to diversify. And a lot of times I take money from my stock account, put it into real estate. Sometimes like real estate in Toronto is really bad. I don't know if you know, guys, like it's really bad. Okay. So sometimes we put money, like the rotation of money from here to there is actually very useful as well.
So is this a one-on-one mentor, or is this
a small group? It's 4 to 6 people. I do have private mentorship as well, but it's more expensive. So it's a group of 4 to 6. And when I talk to someone in the group, everybody else is learning from the way I get them. I get them to present their trades to me. That way they have to think about it and get more engaged. So people understand from my questions to him. Like, for example, James, I see a mistake here. Do you see it? And everybody's looking. So you're learning from me talking to you. And
I love it. I do the same thing the way I teach. I love doing real-time teaching because real-time teaching is realistic.
Yeah.
Like I was a firefighter and we would bring these simulators out and that wasn't real. But when we would get a house to actually burn down, we would bring different things because it's a real, you're doing real
thing.
Stuff.
Yes. Yeah.
So when somebody signs up for this, how many hours a week are they putting in?
So the time commitment is 1 time a week, 2 hours. So that's the session. We agree on a time, the group of 4 to 6 people. And then every day it's 10 minutes of homework. Basically, you need to do 3 trades a day. So it's very manageable. It's designed for busy people. So, and I'm not really chasing highest ROI. The way I designed it is the best return on risk. I do not want to take a lot of risk. Return on effort. I do not want to do a lot of work. Return on time. I only want to give 10 minutes a day. I don't want to look at charts all day. And return on stress. I do not want to be stressed at night. I want to be doing it something that I perceive as relatively safe. So it's designed for all of that. And for me, it's a really good ROI. 24% is not bad.
No.
You said it's a marathon, not a sprint, like I think James said that earlier. It's teaching people how it's sustainable. Like this is something that you can do long term, and it's
And
not.
the game is to be in the game. You don't want to do something like I don't know. Somebody said like it's kind of the long game. Meaning, if you go and I know there's not a lot of soccer in the US, but if you get invited to a soccer game and you're so much focused on winning to the point whereby you're kicking people like people bad, you will not be invited to the game tomorrow.
Right.
The game is to get I want to be in the stock game today, tomorrow, next month, next year, after 20 years, after 30 years. And I do that by not taking a lot of risk, right? Small, and 24% for me is not small. You double your money every 3 years with 24%. Like consistent small returns,
Right.
and doing it for long years, it will yield much better results than trying to kill a whale today and you get killed tomorrow. High level.
Yeah. All right. Well, so you guys all heard it. If you want some more information, we'll have everything in the link. I'm sure Brady will put all of that in. I love the way you teach, and I'm that kind of guy. I try to use what am I trying to say?
Analogy. Yeah, a lot of analogies,
I put a lot of stories into it just so because then people understand it more.
Relate. Yeah. Relate.
And they can relate. So again, I appreciate it. I don't know what I'm getting into every time that I come down here and jump on a podcast. And I'm very pleased with this site that Jen has set up where she calls it a dating site. It's
my podcast dating site. Yep.
For podcast. And this is something that, we've only done this with her and I. This is probably third or fourth time.
I enjoyed it. Yeah, I enjoyed both of you.
And we're getting better and better as we continue on. It's doing exactly what we needed to do because we're generating leads off of this too. On YouTube, and we want to improve our business, but why not reach out and we're meeting some great people. I'm like, I didn't even know this existed. Or
this one I'm like, this was fascinating, and I mean, and like James said, you're very engaging and a great speaker and presenter, and actually I've jotted down to reach out and see what this is all about.
So what we've done in the past too is when they're really good is like we literally had a whole page of different notes to ask you, but we went down this route, and I don't think we need to go down another route because I really think that's I think we got a lot of content, we got a lot of good stuff out of that. So is there anything else you wanted to just finish up with? Any final word? Wisdom maybe?
If people have questions, how can they reach out? How can they contact you? And we'll have, like I said, have Brady.
My website is company name is Legacy Wealth Builder Academy. So they can follow me on YouTube. There's a lot of content there, and also on Facebook. Basically, reach out to me. I also have a master class that is very cheap, and it's 4 hours. That gives an introduction to people about the whole. If you want to see, if you're interested, I invite you to come to the master class. It's 4 hours of pure content, and I talk a little bit about the mentorship at the end, but it's a lot of value because it's a very safe way for people to hear about this in a way that is like one of the main things that it pains me that most of the ads out there are for get rich quick stuff, right? And people are confused, right? Right? People, they look at me and I tell them 24%, and they have 10 other guys that are telling them they're going to double their money every 2 days. And they like, why would I come with the responsible, sane way of talking about things is not very sexy in the marketing world. So not a lot of people are mature enough to say, you know what, this might be a little bit more real than all the different stuff that I'm hearing out there. So good to find good people like you guys to talk to.
Yeah, this is great. This has been fun. So absolutely appreciate having you on. And Brady, our content guru, ninja, he'll make this all pretty and put all the contact info in there. And we'll let you know when it's available. And like I said, we'll reach out. I find this is really interesting. So, and something we don't know a lot about, like James said. So
definitely learn a lot out there from doing these podcasts too.
Yeah.
But I didn't know if it was going to be like that. And it's very intriguing. It's not exactly the same thing, but they're all relatable is what I'm trying to say.
Yeah.
Jen and James, I enjoyed it very much. Thank you very much.
Thank
All right,
you.
you
Finn.
have
We'll
a
talk to you
great
soon.
rest of your day. Thank you.
Thanks for being on.
Bye bye.